The next speaker would also do the same thing. We're looking to the future, but they're also a partner for GVCA Annual 26. So let's welcome upstage Regional Director for Norfund, Naana Winful Fynn, with a round of applause. Thank you for your partnership. Oh, come on.
Good morning, everyone. Is it still morning? Yes, it is. Good morning. Thank you, GVCA, for this opportunity. It's an honor to be here with our investor partners and the industry community to share our thoughts. For the benefit of those who may not know, Norfund is Norway's DFI and the Norwegian government's main instrument for helping to drive development through investments in the private sector to create jobs and improve lives. We invest for both commercial returns and development impact, directly in renewable energy, financial inclusion, agribusiness and manufacturing, and green infrastructure sectors. And equally importantly, we invest indirectly through funds, permanent capital vehicles, and platform companies. As I reflected on this really interesting theme of GVCAs for this conference, fueling Ghana's future through domestic alternative investments and unlocking trapped capital, a few thoughts came to my mind. I believe we can all agree that Ghana's growth ambitions require significantly more long-term patient capital than what traditional financing channels alone can provide. Today, we're told only about half of SMEs have access to traditional bank lending, as an example. And they tell us these loans are often too short-term and lending rates are a challenge. Whilst traditional loans provide an important instrument needed in companies' capital structures, other instruments are needed to serve different needs. And access to both public capital markets, like our Ghana Stock Exchange and Ghana Fixed Income Markets, and private capital sources, like what we're discussing here today, are indeed what is optimal for companies to grow and achieve scale. Capital from domestic alternative investment providers, particularly going into the private equity and venture capital fund spaces, plays a truly critical role in mobilizing capital for productive sectors through the provision of much-needed equity and hybrid structures. Though the private equity and venture capital spaces are fairly nascent in Ghana, for example, AFCA reports that over $4 billion was deployed in PE and VC in Ghana from 2012 to the first half of 2025. I think we can all agree that is significant in terms of amount of capital and the impact associated with it. As Norfund, we recognize the essential role that this industry and asset class plays in driving development in Africa. Today, sub-Saharan African funds form about 60% of our funds portfolio, with about $930 million committed, of which West Africa commitments total about 300. We're working on that. We want to do more. Some of our investee funds and permanent capital vehicles that invest in Ghana today include our most recent growth investment partners, which Kwabna talked about, Oasis, Verod, Adenia, Africa Invest, Helios, and Vantage, to name a few. We also recognize that beyond our own direct investments, investing in funds allows us to achieve additional reach and impact to complement the capital provision, value addition, and institutionalization work that we try to do directly in our investments, such that our impact then carries beyond our core countries that we invest in, beyond our direct investment sectors, beyond the companies we can directly invest in with our own investment criteria. We also co-invest with funds to build up our own capacity and learning in new areas, whether it's funds we are currently an investor in or other funds. Fintech and digital infrastructure are areas that we have tried to build our own knowledge in, working alongside fund managers. And through our fund investments, we try to help to support the development of a pipeline of investment-ready businesses that can continue to absorb additional institutional investor capital, both in the public and private capital markets. But the truth is, despite all this work, and I am sure some of you can identify as I look around the room. As I realize that I'm at least halfway through my life, and it's not clear to me that we're leaving a better country for our children than the one we live in now, I have had to ask myself how we speed up the pace and scale of development. One key to doing this is around the theme for this conference. It's around unlocking pools of local trapped capital and channeling them into investments that support actual scaling, significant scaling for our companies, job creation, improved productivity, and resilience for our companies. This is essential to speed up the pace. So I urge our institutional local investors here, pension funds, family offices, any other classes of institutional investors here that represent what is truly a growing but still largely untapped pool of domestic risk capital to jump into this asset class with us, to drive investment and deployment into our companies at scale. And as a DFI that's been at this for at least a couple of decades, we offer ourselves up. I go back to Danladi's speech and how we actually action this, right? We offer ourselves up as a very willing partner, happy to share our own experiences, lessons learned from the school fees we've paid, the mistakes we've made with local institutional investors. For us, local institutional investors coming on board, as we've recently done with our investment alongside Access Pension Funds in Growth Investment Partners, joining BII, is a big win. It allows us to share risk, to get a complementary perspective with often even better local context and understanding than we have ourselves, or at least a different perspective, from aligned investors, from aligned partners with similarly patient capital. And ultimately, in pursuing our mandate to drive development, we recognize that unlocking this trapped capital so that there is stronger local ownership of the economic growth and development agenda for our country, the existence of a sustainable investor base beyond DFIs like ourselves, especially for fund investment, and the provision of additional sources of risk capital for growth for our companies through funds to allow them to scale, to drive more job creation, to increase productivity, to institutionalize our companies. That may be the impetus, the secret sauce needed for development of our country to speed up and ultimately for development of our country to happen in our lifetimes. So I say to the local institutional investors here, come on, come join us to invest in funds. And that may be one of the hard things that we need to collectively do to speed up the development of our country. Thank you very much.